Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. A Friday rally overcame a shaky week, sending stocks mostly higher. The Dow Jones Industrials average slipped 0.3% for the week. Meanwhile, the Standard & Poor's 500 gained 0.48%, and the NASDAQ Composite Index added 1.6% for the 5 trading days. The MSCI EAFE Index, which tracks developed overseas stock markets, fell 2.37%. Stocks rallied on Friday after a stronger employment report than Wall Street expected. The headline increase in September payrolls initially generated fears of further Fed rate hikes, leading to a spike in bond yields and steep early morning losses. A yield retreat may have triggered the turnaround as investors focus more on the month's moderate wage growth. Stocks were shaky for much of last week on rising bond yields. When Treasury yields hit their highest level since 2007 on Tuesday, stock prices dropped, leaving the Dow Industrials in negative territory for the year. The catalyst for the day's spike in interest rates was a surprisingly strong JOLTS, which is a job openings and labor turnover survey, which showed nearly 1 million more open jobs than investors had expected. The labor market remains resilient. August JOLTS showed job openings exceeding 9.6 million, above the consensus estimate of 8.8 million. A weak automated data processing private payroll job growth, which was released on Wednesday, that showed 89,000 new private sector jobs, appeared to be an outlier compared to the other reports. Friday's monthly employment report showed a robust gain of 336,000 new jobs, nearly double the consensus forecast of 170,000. At the same time, the previous 2 months saw significant upward revisions of 119,000 combined from initial reports. Wage gains rose modestly, coming in below expectations and striking a hopeful note on inflation. As always, we will continue to keep our finger on the pulse of what's really going on in the markets. This week's economic news that we're watching, in addition to what's happening over in the Middle East, includes the Producer Price Index on Wednesday, Federal Open Market Committee or FOMC minutes also released on Wednesday. On Thursday, we have the Consumer Price Index and jobless claims, and then on Friday, we have a look at consumer sentiment. One of the things that sets SmartMix apart is that we primarily invest in individual stocks, cutting out the many hidden costs that can be found in today's investment products. Some of the individual companies reporting earnings this week that we are keeping an eye on include Thursday, we have a report from Delta, and then Friday, a lot of banks. We've got JP Morgan, a healthcare company in there too, United Health Group. We also have Citigroup, Wells Fargo, PNC, as well as BlackRock. If we are not investing your life savings for you, you can learn about our low-cost, fully transparent, and personalized approach at smartmixportfolios.com. All right, so here's a question for you. Why are investors so fearful? Well, have you ever heard the saying, be fearful when others are greedy and greedy when others are fearful? In recent weeks, the investing outlook has become a bit murky, which has led some people to let their emotions get the best of them. As you can see from this chart, fear, almost extreme fear, has become the driving force for investment decisions as the Fed talks tough about higher for longer with interest rates. So, is it time to be fearful, or are the markets just moving through another cycle? It's difficult to determine, but you don't have to look very far if you're looking for reasons to be scared. A recent CNBC survey of 300 money managers found that 61% believe the stock market's gains this year can be attributed to a bear market rally, and 41% expect a recession by mid-2024. So this leads me to another one of my favorite Wall Street expressions. Bull markets climb a wall of worry. Let people be fearful. Let them worry about what's next. At times like this, it's important to focus on your unique investment strategy. And this should reflect your goals, time horizon, and unique risk tolerance. We anticipated that there would be some bumps along the way. There are always bumps, and there will always be bumps. Have you ever heard the expression, if you love sausages, never watch how they're made? The same can be true of stock prices. Warren Buffett once said, I would tell investors, don't watch the market too closely. If you listen to market pundits, it sounds like things are regularly going from bad to worse. But September is over, and now it's October, a month that has had its share of volatile moments over the years. It's a seasonally weak period for stock prices, and that's important to remember as stock prices churn a little bit. Summer ended on September 22nd, so take a break from scrutinizing stock prices and focus on enjoying your favorite fall activities. If you want an update, watch our recent monthly update, RSVP for our next one, or please reach out. Otherwise, it may be best to follow Warren's advice and not watch too closely. Here's something to look forward to. As the days creep closer to Halloween, my kids get more and more excited for all the sweets that lie ahead. But did you know that the National Retail Foundation projects Americans will spend a staggering $12.2 billion this Halloween? That's about $100 per household and amounts to a 15.5% increase in spending compared to last year's Halloween. And out of the $12.2 billion, an impressive $3.6 billion will be spent on candy alone. What's changed? Celebrations like Halloween are exceeding even pre-pandemic levels. After being cooped up, we're all looking for a good excuse to spend more time with family and friends, even if that means spending more to have a festive celebration. According to candystore.com, these are America's top favorite Halloween candies. 1, Reese's, 2, M&M's, Hot Tamales, Skittles, Sour Patch Kids, Starburst, Hershey Kisses, Candy Corn, my favorite, Hershey Mini Bars, and Snickers. Did your favorite candies make the list? Will you be handing candy out to trick-or-treaters this year? And for all the little ones asking, will you be handing out full-size candy bars? Inquiring minds, like my kids, would really like to know. All right, that's it for today. Thank you so much for staying until the end. I have another riddle for you. Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. And congratulations again to Roger and Eden Prairie for correctly getting the answer to last week's riddle. Roger, thank you for participating. We will get that gift card for coffee out to you in the mail very, very quickly. And a challenge to the rest of you to beat Roger. Roger is our #1 correct riddle answer guy out there. So a challenge for all of the rest of you watching. Beat Roger to this week's riddle, would you? All right. So again, be the first person to post the correct answer down below this video, and we will send you a gift card for coffee on us. This week's riddle is, it is round and has a big mouth, but it never speaks. It is most often in a cabinet. What is it? If you'd like the answers to previous week's riddles, as well as last week's riddles, please visit our website /riddles to get those answers. All right, lastly, later on today, I will be sending out our full economic update for the week. This update includes more than what I talked about here this morning, including our popular weekly tax tip. If you like this email and you're not getting it, you may subscribe at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.